You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer.
Hi, it's Victor here from ForSureMarkets.com. In today's video, I will be sharing with you my key secrets to fundamental analysis. Okay, my key secrets to fundamental analysis. When I start talking about fundamental analysis, honestly, I can talk for 24 hours non-stop. I just keep going and going and going. Okay, because it's a very, very interesting concept. And really, it's following what's going on around the world and how it affects your money is very, very interesting. Okay, how do beginner traders use fundamental analysis? Okay, they come on the calendar, they look for a particular news. Example, let's look at this Canadian dollar. Canadian dollar. Let me look for something that has a forecast. Friday. Okay, this has a forecast. A red one is preferable, but this doesn't have a forecast yet. Okay, so I'd like to use one that has a forecast. So, example, preliminary UOM consumer sentiment. Okay, so your consumer sentiment is basically about how much people are consuming, how much people are buying. Okay, are they buying more? If they're buying more, then it means there's more money in the system, and of course the economy is going to be growing. If they're buying less, it means there's less money in the system and the economy is going to be regressing. Okay, so what new traders do is that they come to the calendar, get the dates, like Friday. This is Friday, July 17th. Okay, and then they get the time, 3 p.m. Nigerian time. We look at the forecast and then they go to their charts. Okay, and so they look for all the dollar currency pairs. Example, euro dollar, dollar yen. Okay, and pound dollar. There are many of them. Okay, and so what they do is that they can just say, okay, I think this data is going to be good, and they buy before it comes out. Or they say, I think this data is going to be bad, and they sell before it comes out. And most times, because of the volatility, when it goes big, it might go big in your favor or it might go big against you. And the volatility usually affects your mindset and your psychology. Most of those newbie traders will end up losing money trying to trade the news. Some others wait for the news to come out, and once the price starts moving in any direction, they follow it. Okay, but you soon come to find out that you cannot follow the price based on news, because if the market was here, for example, okay, let me go to a 5 minutes chart because that's where you see the move is sudden. Okay, if the market was here, for example, let's say here, okay, and you saw after the news was released and it started going down, if you're doing that, you're going to sell. Okay, and sometimes they'll sell with big lot, and before you know it, you sell. Look as if it's going down. See now it has gone up. Your account starts going negative. Out of fear, you close the trade and it starts going back down initially where it was supposed to go. Okay, so most of the time, and then you can see after here it went back up again. So you really cannot trade the news that way. Okay, that is a setup for failure. Okay, don't ever think that you can trade fundamental analysis that way by trying to trade immediately after the news or by trying to guess which side it's going to go. What you need to do is get a holistic picture of the market fundamentally. Okay, and so what can happen also, another thing that can happen is that, example, let's look at this chart. Let's say the market was here, or let's say the market was here. If the European economy is very, very good, like now the euro is booming, Okay, euro dollar is kind of very, very bullish. Okay, and you're trying to trade the news. Okay, and the news is bad. What can happen is that the price goes down because the news is bad, but then overall the euro is strong based on all the previous news that have been coming out maybe for the past 2 weeks or the past 3 weeks or the past 4 months. Okay, so the point I'm trying to make right now is that one single news data is not enough to change the trend of the market. And so what can happen is that you can have a small down move here and then it comes back. Surprisingly, you just see surprisingly it starts going back up, right, in the positive direction, even though the news was bad. That is one thing that usually shocks and surprises traders when they try to trade the news. They see that the news is very, very bad, but why is this currency going up? So it's not just about following the bad news or good news as in at any point in time. Okay, the news can be bad, the price can go down 20 pips or 30 pips, and in 3-4 hours it goes up 200 pips. Okay, because overall fundamental analysts are looking at that. They are not just looking at one data, they are looking at a set of data. Okay, so if the data for the last 3 weeks have been good and then the data for today is bad, you can have a slight downward movement in price, but the data for the last 3 weeks, okay, is still telling us that this economy is doing well, and this bad data is not enough to start convincing me that the economy has started doing badly. Okay, so that is my secret to fundamental analysis. And where do you tie that up into? How do you tie that up? By focusing on the interest rate. Okay, so when an economy is good, okay, and the economy that is coming out, the data that is coming out is very good, okay, what you'll find out is that the central banks of that country have to increase the interest rate. They have to increase the interest rate in order to stabilize the economy. Okay, and when the economy is doing badly, they have to cut the interest rate to stabilize the economy. When they increase the interest rate, okay, the currency appreciates in value. Okay, and then when they cut interest rates, the currency depreciates. Sorry about my handwriting, I'm just rushing that. It depreciates. Try not to rush. Okay, it depreciates. So your job as a fundamental analyst is to find out the factors that affect your interest rate. Okay, so your interest rate is the number one economic data that you need to be monitoring. Okay, so we're not exactly waiting for the day the interest rate will be released, but the day the interest rate is released is when the big move is going to happen. Okay, that's when the big move, you can see big moves of 300 pips, 500 pips in 1 hour. Okay, even in 5 minutes you can see such big moves. So this is the king of fundamental analysis, and this is all I follow. Okay, so all you need to do is monitor the factors that affect interest rate. Okay, monitor the factors that affect interest rate. If you can get the factors that affect interest rate, then you are directly also monitoring or analyzing the factors that affect the economy. Okay, you are monitoring the factors that affect the value of a currency. Okay, so that is my secret for interest rate. Okay, most traders, they try to analyze everything individually. They try to analyze interest rates separately, analyze GDP separately, and analyze retail sales separately, and all of that. But let me leave that for the next video. The key is to focus on interest rates. In the next video, I will share with you how all the economic data and events affect the interest rates. Okay, so very, very big key, very, very big lesson. This is worth $1 million. Okay, nobody will teach you this anywhere else. Okay, focus on the interest rate. If you focus on the interest rate, you cannot get it wrong, and I will explain why in the next video. Okay, if you like the video, definitely you have to like the video, give it a thumbs up. If this is your first time watching any of my videos, make sure you subscribe to the channel by clicking the subscribe button. Also click the bell to the right of the subscribe button, click all notifications so that you will be notified whenever I upload a new video, especially the next video I'm about to upload. Okay, so have a wonderful day. I'll see you in the next video. Cheers.